What is going on with the River token? In the span of just a month, the token more than 10x, 1,400% in gains. The question is why? Who's buying here? Who's selling here? What's triggering this rally and how much higher can River go? Let's have a look at the on-chain data, the data most people are not considering. So clearly there's something going on with River that's beyond the general market going up. In the last week, we more than doubled. In the last month, we more than 10x. The price is at $34. Now there are three versions of the token. There's one on Ethereum, one on the Binance Smart Chain, and one on Base. Have a look at who's owning the tokens there. The four largest holders on Ethereum are all smart contracts. They've got 31%, 20%, 20%, 17%. So that's 50 in total, 70 in total. Close to 90% of the entire supply is held by those smart contracts. Here's the Binance Smart Chain. The two largest wallets hold 75% of the supply. Again, smart contract wallets. Then we've got a centralized exchange. And here is the Base chain, a single wallet owning 81% of the supply. Now, why am I looking at data like this? It's because it's important who has control over the price. If a lot of the supply is held by just a few wallets, that means that the people that have decision over those wallets, they in the end impact the price. Now, what does it mean? Why do we have all of that allocation in smart contracts? The reason is a lot of the River tokens aren't yet circulating. They're going to get unlocked over time. This is the tokenomics of River. And we can see how over time the investors, the core contributors, a dynamic airdrop, which is basically just an incentive program, and ecosystem related allocations all get more and more tokens over time. And that's of course not great if the demand doesn't grow at the same pace as the supply does. Here, for example, a single wallet holding close to 1 billion worth of River tokens. Does this mean that $1 billion worth of capital went into that wallet? The answer is of course not. Somebody is creating a project with a lot of tokens, and then a small minority of the supply gets openly traded. Now, if that supply then gets a bit of demand, this will then increase valuations like this. So imagine you were to create a company with 1 billion shares, and then you let 10 of those billion shares trade. Only 10 shares trade, and you sell those 10 shares for $1 to your friend. Suddenly, your company is worth $1 billion. That's basically how those kinds of valuations get created. This value here is not real. If all of those tokens were to suddenly hit the market, the price of River would be less than 0.000, how many zeros you want, $1. Really have a look at the liquidity. This is the liquidity on chain. Most holders are on the Binance Smart Chain, and the largest liquidity pool has only $238,000. So it seems like there are a few fishy things happening here, right? A lot of the supply is owned by a few people, by a few wallets at the same time. The token is not really liquid on chain. There are a few more things that I don't really like. My NordVPN blocked the website altogether. When I then continue anyways, for whatever reason, the website doesn't load anymore. It used to load a few days ago. If I open it with another browser, I'm stuck at a verify the browser window. The documentation still works. River is a very technical project supporting borrowing and lending platforms across chains. That's something that even Aave, the leader of borrowing and lending platforms in decentralized finance, has not yet implemented. They have segregated their liquidity depending on the chain. So you can't just deposit on one chain and then borrow on another chain. Apparently, River solves this. But do we really see adoption? Interestingly enough, the Twitter profile is mainly about the price development. It's mainly about estimating where the River price might go. It's mainly about listing of the token on centralized exchanges and perpetual futures. It's not about technical development, because have a look at the GitHub repository, and that was updated last year, a lot of the files 2 years ago. And have a look at how much the platform is actually getting used. This is the total value locked of the River protocol. It used to be at one point close to 600 million, but then that crashed to 100 million and is now just hovering along. The Twitter profile might give us a first hint what's really going on. If they get so excited about a perpetual futures listing, maybe the perpetual futures is all there is to the story. In the last 24 hours, we only saw 16 million worth of trading volume on BitGet on the spot market, but on the perpetual futures market, we saw close to 1 billion worth of trading volume. Now, why does that matter? It's because perpetual futures interest is short-term. It's short-term trading. Most people that want to hold an asset long-term just buy spot, because when we buy on the perpetual futures, we have financing costs. We have to finance our purchases. That's usually more expensive compared to just buying spot. Perpetual futures interest tends to come and go, and the vast majority of traders betting on River are actually betting on falling prices. The funding rate is negative. There are a lot of pessimists. So what I believe is happening here is that enough people were betting on falling prices of River, were very skeptical of that rally, that then the market makers were interested enough to buy up the supply, to push the price even higher. And so as a consequence, we see short squeezes, we see more and more people getting liquidated. That's the short liquidations we see here in red. The shorts are currently losing their shirt. The trading volume is sky high, and there is a correlation between trading volume and the spot price, right? The spot price tends to be higher when there's a lot of trading volume. It tends to come down when trading volume comes down. Currently, we are at record high trading volumes. At some point, very likely this will turn around. Open interest is the same thing. Again, the perpetual futures traders are currently getting wrecked. There's a lot of trading on River. And even though this rally doesn't look natural at all, we've got the market makers against us. We've got the Binances of this world against us. Bet against this rally. Better just to wait until the dust settles and maybe just put River on a watch list and maybe put this in the calendar. Look at this maybe in 2 or 3 weeks when nobody talks about River anymore, when then the price will likely deflate. That's the point to potentially bet on falling prices. Not right now, because right now it's too popular to bet on falling prices. Now, I think it's very clear where the story will end. The token supply expands over time. We have seen these things time and time again. For example, have a look at this. This is DYDX, another technical project. It was the innovator of perpetual futures in decentralized finance. We had very little supply at the beginning that then rapidly grew over time. And even though the project itself saw more and more usage, right, this is a total value locked measured in DYDX tokens. We saw initial hype, we saw an initial rally of DYDX relative to the rest of the altcoin market by more than 800%, but then subsequently the price, because of the tokenomics, underperformed by 99%. I'm not saying that we're going to see a 99% underperformance of River, but I do have the impression that we're rather at the beginning of this chart. A lot of hype right now, and at some point the tokenomics will take over and the market makers will sell off all of the supply that they currently use in order to short squeeze everyone. River is currently at the beginning stages of where DYDX was upon launch as well. If this video helped you to potentially avoid a costly mistake, then feel free to give this a like. Feel free to also, of course, come back. I publish videos regularly on this channel. Feel free to also check out the premium membership. This is where I share my own trades. I like to look out for opportunities to bet on falling prices of many altcoins. Most altcoins tend to underperform Bitcoin and Ethereum over time. And there is a way, risk adjusted, to make money with that long term. So again, premium is your space. Thanks for watching and see you next time.